Hello, Christian. Before we talk about whether one should buy gold right now, let's take a look at the current situation on the gold market. Is the downtrend after the strong rally from earlier this year considered a normal correction, or are we seeing something that investors should take seriously?
We are seeing both. On one hand, it's a very healthy, normal correction, a healthy development, because from one year to the next, we've gone from one all-time high to another, so to speak. Now we have a necessary correction back towards the healthy long-term growth curve. At the same time, potential and current investors should take this very seriously because now is the right time to get in or buy more as prices will rise again since the fundamental economic framework conditions haven't changed. The keyword here is inflation.
A great number of investors have been waiting for several months for gold to finally be cheaper and more affordable to purchase. Now the price has dropped compared to the beginning of the year, but suddenly many still hesitate and don't dare to buy. Why is it difficult for investors to make the decision to purchase even though an ideal buying opportunity has presented itself?
Yes, it is an interesting phenomenon. We're getting into psychology here. This is known as the bargain paradox. Let me give you an example. Imagine you go to the supermarket and your favorite coffee is now 20% cheaper. You and everyone else would rush to buy it at the store because you are familiar with the brand and now you can get the same for less. Stock market participants experience an inversion of this. People confuse prices with value, so when the prices go down, fear arises whether the actual value has decreased. But of course, that's not the case. People have the desire to catch the absolute bottom. Of course, it is natural to want to get the best possible price, but it is practically impossible to do so. And if you hesitate, you may miss the buying opportunity entirely. When the cues start to form and the herd instinct begins to rise once again, it will already be a late market entry. People tend to follow what others are doing. Long queues start to form, and the FOMO, F-O-M-O effect, fear of missing out, then really starts to come into play. So it's a very interesting psychological story.
Many are naturally wondering, perhaps our viewers too, when is gold actually too expensive? Or how can investors recognize that it might be a good opportunity to get into gold right now since there have been some pullbacks? Maybe you can also enlighten us briefly. When is the gold price really too expensive? Is there even such a thing? Or what is your expertise there?
Yes, that's a very, very good question. In fact, gold is never too expensive because the value of gold has remained roughly the same over millennia. There are interesting comparisons with real goods. If you were to compare it now to ancient Rome, a nice toga and nice sandals cost about 1 ounce of gold. Today, you can buy a tailored suit and nice tailored shoes for about 1 ounce of gold as well. So not much has changed there. There is another comparison which is quite humorous, the cow-gold ratio, which has also existed for over 5,000 years. A good dairy cow costs roughly between half an ounce and 1 ounce of gold, and that was the case 5,000 years ago, and it's still the case today. So in fact, the value of gold stays roughly the same. It is the fiat currencies which are decreasing in value, and that's why prices are rising.
If you look at the current headlines, there are also many scenarios which are being prophesized right now. Some say that the price will continue to fall for a while before the next breakout. How do you think the gold price will develop in the near future? We can see that not even the experts themselves know how the price of gold will develop in the short term. What is your current view on this? You already touched on it briefly. There are now quote unquote natural setbacks. But in your view, do you believe the prices will stabilize now and continue to rise in the coming months?
Naturally, with the caveat that I can't automatically look into the future either, I'd like to say that in the short term, it's possible, like in a casino, for it to go up and down. Those are healthy short-term movements. In the long term, we're currently seeing a correction. The interest rate policy of the Americans has made the dollar and the fiat system more attractive again in the short term. Because of this, some money is flowing away from precious metals. In the long term, the economic framework conditions have remained the same, and therefore gold will rise in price again. What is relevant here is the money printing, the ever-expanding money supply, and the inflation which comes along with this.
Would you perhaps also recommend that investors wait a bit longer now, as there might still be setbacks in the coming weeks or 1 or 2 months?
That's also a great question. Here we face the dilemma, buying too early or buying too late. If you ask me, buying too early means you buy, but the price goes down a bit more. In contrast, buying too late is when the price is already going up again. I'd recommend an early entry rather than a late one. What one can do is divide the total amount into several smaller transactions. This way they are at least somewhat exposed to the market while mitigating risk. It is widely recognized that the economic framework which we live in is subjected to high levels of inflations. The value of gold does not change. It is the denominator which expresses the price of gold which changes due to inflation. Therefore, it is simply best to purchase some gold.
You just touched on a point which may be interesting to our investors and viewers regarding purchasing gold and silver. You just said there's no perfect time, but better early than too late. How can one assess that? Because gold is more of a medium to long-term investment. If someone wants short-term investment strategies and needs to take their money or liquidate their gold instantly, then what specific styles or investment options are available for them? What would you recommend there?
Well, I don't recommend it, but if someone wants to gamble short term, they can. They can go gamble at a casino or buy gold ETFs. As long as the broker is willing to buy it back from them, then they can sell it again. But I don't recommend it because I want my clients to sleep soundly at night. They are not looking for a moonshot trade or a leveraged exit. They just want to protect their assets. That is why I recommend real physical investment grade gold. And the price is a tricky thing. There's always a better price eventually and another spike up or down. But I wouldn't put myself through that stress. Buy regularly, protect your assets, sleep soundly. That's my recommendation.
One final question here. Additionally, the gold ETF is losing more and more popularity, especially right now due to the news. China also wants to restrict this to some extent. Does physical gold therefore gain even more in value?
Well, of course, because with gold ETF, it only takes a slightly larger sale or a slightly higher demand for the physical gold that's supposedly behind it, and then this gold ETF system could completely collapse, and the physical price, meaning physical gold at the precious metal dealer, will then explode even more. Short-term gambling is a decision which everyone can make for themselves. But when it comes to your life savings and your assets, it is better to be able to live in peace and quiet, knowing that you are protected. To achieve this, buy physical gold.
Thanks very much for your assessment, Christian.
You're very welcome.